This week, Apple unveiled its financial report, and it looks very promising. And it showed a year-on-year growth of 4%. 4%, okay? Basically below what the company grew compared to the previous quarter, but it is essentially double the growth compared to the previous year. We had a big profit increase here. In earnings, in revenue, $124 billion. Setting a record, the company has never made so much. We also have a gross profit of $58 billion, greater than the third quarter of last year and the previous quarter, with earnings per share of $2.40, cents per share of stock, and a record EBIT of $45 billion too, at 45.9, compared to the previous quarter was 32.5 and a year ago 43.2. The shares rose by 9% in this quarter, okay? This compared to the quarter when we look to the year, essentially for a company of Apple's size, a giant in its field grew by 30% this year. Now comes the big question. Is it a good time to invest, Gustavo? Our expertise here is, which is, recognizing the optimal moments within the trend is crucial, as we hold strong beliefs that even though they are good stocks, they have their upward trends, their sideways trends. In other words, where the investor just wastes time and doesn't see money, and their downward trends as well, where during this time, investors witness a decrease in their funds. So what is our expertise? Our expertise lies in waiting for upward trend moments to proceed with an investment and enjoy just the best part, the prime slice of the stock. So basically, the last upward leg that we referred to within this trend occurred on December 2nd, that continued until the year's end with an increase of 9%. Folks, many people may not appreciate a 9% increase, but this represents 2 years of American fixed income shown here throughout December. But after it made this movement, sellers took the opportunity to realize their gains, leading to a decline in the stock. At this time, the company's results were announced this week, and that excitement always follows while we are witnessing outstanding figures. I'll buy and invest more in the company. Graphically, it's not currently in a rising phase. It's in what we refer to as a no defined trend. What is this? So basically, the stocks, they increase and then correct. It rises and corrects. It goes up and corrects. Right now, it's in a correction phase. There is no clear indication that it will continue its upward movement. So basically, it has been in this correction movement. Great, Gustavo. So when would be the best time then for us to make an entry? At this moment, when we have a stock at its highest, meaning it's never been this expensive, the ideal moment would be if the business breaks through, or rather, if the company's value breaks above $255 again. Why? Because this gives us a view that even if it's high, investors still think about buying the stock no matter its price. That's what happened here in this last signal. Look, those who did not respect and did not understand this systematic thinking of investors have been here since July 2024 until November 2024, August, September, October, November, 4 months, without seeing your money appreciate, given that 4 months invested in another company or even in fixed income would provide significantly higher returns than simply waiting. Thus, right now, she can choose to wait a few more months until her value starts to increase again. Therefore, even if we pay a higher price than currently, it shows that investors are ready to pay more for the company. So yes, indeed, according to the balance sheet, the company is performing well, thank God, but in terms of charts, it is no longer on an upward trajectory. It is no longer increasing in value week by week. And from the heart, I hope this video has clarified your perspective. If you want to learn how to gain this insight, how to invest in the US market, just sign up for our mentoring program. God bless you. Take care. Goodbye.